Welcome to This Explainer. Today, we're doing something pretty incredible. We're decoding the actual mechanics of American capitalism by looking at the true architects of affluence. We're moving past the myths and the rumors to uncover the verifiable, step-by-step blueprint of generational wealth. How does a family go from having absolutely nothing to actively shaping global markets? Because let me tell you, it's not just about getting lucky. It's about systematic, calculated empire building. Okay, let's dive right into this. We are examining exactly three monumental corporate empires today: Goldman Sachs, Hyatt, and Gap Inc. Why these three? Well, they aren't just legacy companies. They represent modern dynasties built entirely from the ground up. And they did it across three vastly different sectors of the economy. Understanding their trajectories really decodes the larger system of extreme wealth creation for us. Now, you might be wondering, when you look at these practically untouchable brands today, it begs a really fascinating question. How did families with such humble immigrant origins, picture Marcus Goldman peddling promissory notes on the streets of New York way back in 1869, how did they build this massive generational wealth? Navigating that staggering gap from basic everyday survival to total institutional dominance is the core mystery we're going to unravel today. Here is our structural blueprint for today. First, origins of American dynasties. Second, profiles in empire building. Third, measuring economic power. Fourth, the wealth-building blueprint. And finally, legacy, power, and ethics. Section 1. Origins of American dynasties. The foundations of these colossal empires were built on incredibly humble immigrant origins. The Goldman, Pritzker, and Fisher families didn't start with heavy institutional backing or giant piles of capital. Not at all. Nicholas Pritzker actually arrived in Chicago totally penniless, speaking absolutely no English. And the Fishers, they initially struggled just to find jeans that actually fit before launching Gap in 1969. These families had to navigate severe economic depressions and fight for a literal foothold long before any real business breakthroughs materialized. Now, what's really interesting about this is that wealth building of this magnitude absolutely does not happen overnight. It is a multi-generational effort. Tracking their timelines reveals a shared long game. We see these gritty initial launches spanning the first 5 to 10 years, hard-fought industry breakthroughs that take a solid decade to develop, and then finally, massive global expansions that take 20 years or more to truly scale up. It's a calculated progression spanning decades of measured risk. Section 2. Profiles in empire building. So while their overarching strategies were remarkably similar, the actual battlegrounds they chose were completely different. The Goldman Sachs family revolutionized the super high-stakes world of commercial paper and finance. Meanwhile, the Pritzkers executed an absolute masterclass in real estate acquisitions, building the massive Hyatt hospitality empire from just a single motel near LAX. And the Fishers? They completely transformed everyday retail with Gap Inc., scaling a super simple denim concept into a global apparel heavyweight. There's a quote that hits the nail on the head here. The evolution from immigrant struggle to institutional influence is the blueprint of American capitalism. See, we aren't just talking about successful small businesses reaching profitability. We are looking at the specific mechanics of crossing that huge chasm from scrappy, day-to-day entrepreneurship into becoming a permanently entrenched institution, one that fundamentally shapes global trade and consumer behavior for generations. Section 3. Measuring economic power. Think about the sheer financial gravity we're talking about here. The towering revenue scale of Goldman Sachs, Hyatt, and Gap Inc. represents staggering market capitalization. These aren't just your standard profitable companies. They generate tens of billions in annual revenue streams that literally rival the GDP of entire nations. By employing hundreds of thousands of people globally and managing trillions in assets, they operate as foundational pillars of the modern economy. It's honestly mind-boggling scale. Beyond that massive domestic revenue, their combined global reach extends to almost every single continent. Their unified influence across finance, hospitality, and retail cements this whole concept of dynastic wealth into concrete reality. When these families make corporate decisions, they're dictating international trends, swaying foreign markets, and triggering these massive economic ripple effects that touch almost every corner of the globe. Section 4. The Wealth-Building Blueprint. Okay, so what are the actual core strategies here? Well, they're derived directly from verified history. Universally, these empires prioritized long-term compounding over quick, short-term flips, and they fiercely protected their family equity so they could maintain voting control. We also see really aggressive diversification, like the Pritzkers expanding way beyond hotels into manufacturing and private equity. Whether you're scaling a tiny tech startup or optimizing a mature portfolio, these principles of strategic networking and impeccable market timing are highly actionable takeaways. Let's break down how this builds into a repeatable, phased blueprint. Step 1 requires immense resilience just to survive those incredibly volatile early years. Step 2 is achieving that massive breakthrough via a unique market fit. Step 3, relentless, disciplined expansion using reinvested capital. And the final step, Step 4, is solidifying institutional influence. That's the leap from a vulnerable family business into a permanent economic fixture.
Section 5. Legacy, Power, and Ethics. The data clearly shows that dynastic wealth wields profound influence well outside the corporate boardroom. You see this manifesting in massive philanthropic initiatives, funding critical infrastructure like hospitals, universities, and the arts. At the same time, it results in extensive political influence through deep strategic networking, campaign financing, and lobbying across the entire political spectrum. Objectively speaking, the capital generated by these families fundamentally shapes our societal infrastructure at practically every level. So the crucial point when analyzing power of this magnitude is separating documented reality from the noise. Extreme generational wealth always attracts rumors and conspiracy theories. But by focusing on verified historical facts, like their exact economic scale, their public SEC filings, and documented networking, we can actually learn how American capitalism works. That is way more valuable than getting distracted by the exaggerations and completely unsupported modern myths that constantly surround these legacy families. Which brings us to a final, really provocative thought. As generational wealth continues to concentrate at these incredible scales, what exactly is the future of American capitalism and dynastic influence? Does the blueprint we analyze today remain accessible to the hardworking entrepreneurs of tomorrow, or has the ladder been pulled up? It's a lingering question, and it challenges all of us to reflect on the real economic realities of our modern business landscape. Thank you so much for joining me for this explainer. Keep questioning, and I'll catch you next time.